Hello, everyone. Welcome to week 3 of the Business Certificate Series presented by the Westminster Center for Financial Wellness. My name is Alex Puente Tacias, and I will guide you through today's session. This week, we are diving into essential QuickBooks topics, focusing on banking, reconciliation, and reporting, skills crucial for financial management in any business setting. Week 3 is all about the fundamentals of managing financial data using QuickBooks. Our focus will be on linking bank accounts, reconciling accounts, and generating and interpreting key financial reports. By the end of this session, you will have a practical understanding of these processes and their role in maintaining healthy financial records. Here's an outline of what we'll cover today. We'll have a weekly review from week 2, and then, as I mentioned before, we'll have these 3 topics, and at the end, we will go through an activity. Last week, we focused on understanding the types and importance of tracking and revenue and expenses. So let's recap what we have covered last week. We had the types of tracking, revenue and expense tracking, the importance of tracking, which reflects the profitability of your business, assists in budget management, impacts crucial decision-making, and ensures compliance with reporting standards. This foundation is critical as we move forward into more advanced QuickBooks functions. In week 2, we also learned how to create invoices in QuickBooks, and here's a step-by-step summary. We first navigate to a new invoice. We set up the invoice by adding customer details. We add items or services provided. We apply any discounts, taxes, or additional charges. And finally, we save and send the invoice to your customer. This process simplifies billing and ensures accurate record keeping. Now, let's discuss recording expenses in QuickBooks. Keeping accurate records of your expenses is vital for tracking your spending, staying organized, and ensuring compliance with tax regulations. In QuickBooks, the Expenses tab allows you to view and categorize all transactions, identify patterns in spending, and make sure accurate reporting for your financial records. Take a look at this interface where you can see different expense categories and details such as payee, date, and amount. This provides a clear overview of your business spending habits. Another key feature of QuickBooks is managing your vendors. The Vendors tab helps you to track unpaid bills and payments, organize vendor information such as contact details and billing history, and monitor open balances and overdue bills. Here's an example of how QuickBooks displays vendor information, including open balances and payment status. This feature makes sure you stay on top of your financial obligations and maintain good relationship with your suppliers. Let's now start with the first section of this week 3, linking bank accounts. Connecting a bank account in QuickBooks allows you to link your financial institution to automatically download transactions. Here's why that's really important. Automatic transaction updates save time and ensure accuracy. It makes tracking income and expenses easier. and it provides a real-time financial insight for better decision making. The visual it makes tracking income and expenses easier, and it provides real-time financial insights for a better decision making. This visual here shows an example of how the setup process where you select your bank to connect in QuickBooks. This is simple step. This simple step significantly improves your financial management. Linking about account is straightforward in QuickBooks, and we will have to follow the next steps. Open QuickBooks and go to the Banking tab. Select Connect Account and choose your financial institution, and follow the prompts to complete the setup process. This visual on these slides demonstrates the Banking tab interface, highlighting how QuickBooks organizes and automates income and expense tracking. Sometimes you may encounter issues while connecting your bank account, and here are some common problems and solutions to these issues you may encounter. First, your bank may be not live, and you can manually upload transactions using a CSV file. Login issues, double check your credentials or contact your bank for assistance. And missing transactions, refresh the connection or adjust the date settings to retrieve the data. This visual showcases how manually uploaded transactions appear in QuickBooks, ensuring your financial data remains accurate. Now that you understand the importance of linking a bank account and how to troubleshoot common issues, let's see where you can start this process in QuickBooks. First, from the QuickBooks dashboard, navigate to the Banking tab, and then we will click here on Bank Transactions. Once we get there, now that you understand the importance of linking a bank account and how to troubleshoot common issues, let's see where you can start this process in QuickBooks. First, from the QuickBooks dashboard, navigate to the Banking tab. Here within Transactions option, we click on Bank Transactions. And once we get here, we will see the option where it says Connect Account. We will click this green box to connect account. And this is where the process begins. And next, you're prompted to select your bank account. Sorry, your bank, the name of your bank. In my case is Wells Fargo. So I will click in Wells Fargo. And QuickBooks will guide you through logging into your bank's platform securely. So I will click on Continue. And as you can see here, you can sign in into your bank. From this point, I will stop here, but you will see that the system will provide you a step-by-step instructions to complete the connection process. You will see it's really designed to be simple and user-friendly. Let's now start with the section number 2 with reconciling accounts. Reconciling your accounts ensures you will have the transaction within QuickBooks match with your bank or credit card statements. And here why that matters. It keeps accuracy with your financial records update, identifies and resolves missing or incorrect transactions. And one of the best practice for that is because and when to reconcile, we suggest to do it monthly or with each statement cycle to maintain accuracy. This process is essential for maintaining reliable financial records. Reconciliation is a key practice for financial management, and it helps to identify and resolve errors or discrepancies, provide accurate and update financial reports, track payments, fees, and spending effectively, and manage and streamline your company's cash flow. Steps to reconcile. Here are the steps to reconcile your accounts in QuickBooks. You will start first comparing your bank statements. Second, you will add bank-only transactions, include bank deposits, fees, and interest income in your QuickBooks records. You will third add book transactions to make sure all transactions recorded in QuickBooks are reflected in your bank statement. And finally, you will compare adjusted balances to confirm both adjusted balances match. This step-by-step process will make sure your financial records align accurately. While reconciling accounts, you might face challenges such data discrepancies, timing issues, complex transactions, and lack of documentation. And now that we have gone over the key steps and troubleshooting tips for bank reconciliation in QuickBooks, let's take a closer look at how it's done in practice. The video on the next slide will provide you a visual walkthrough of the reconciliation process, making it easier to follow and apply. Let's watch the video.
This is Michaela, a bookkeeper from QuickBooks Live. Reconciling is an important step in managing your business. Let's go over what it is, what you should do before you reconcile, and then how to reconcile in QuickBooks. When you reconcile, you are making sure the records you have been keeping in QuickBooks match your bank and credit card statements. First, make sure that you have accurate records in QuickBooks. Record all your money coming in for the month and all your money going out for the month in QuickBooks. Connecting your bank and credit card accounts to QuickBooks and then categorizing all those transactions is the fastest and best way to keep your books accurate. If you want help learning how to connect to online banking and how to categorize your transactions, then there are videos at the end of this one that can teach you how. It is best to do this process every month after you get your statement from the bank. You'll need your statement to match the bank's records to QuickBooks, so have it handy. Once you are ready to reconcile, go to Settings and Reconcile. Choose the bank or credit card account you want to reconcile. Enter in the ending balance and the ending date from the bank or credit card statement you received. Double check that your opening balance matches your statement. If everything looks good, select Start Reconciling. Now take your bank statement and compare that to the information in QuickBooks, especially the dates and amounts. Find an item in your statement and then find it here. If they match, then put a check mark next to it. If you see an item in your reconcile list that is not on your statement, then don't check it. If you have your account connected to QuickBooks, you'll see many transactions with a check next to them. These items have already been reconciled when QuickBooks downloaded the item, and you matched it in QuickBooks when you reviewed your transaction feed. So no need to worry about these. Once you verify all items from your statement in QuickBooks, you should have a zero balance. That tells you that there is zero difference between what's in QuickBooks and what's on the bank statement. If you have a difference, then you'll see the amount here, and you'll need to figure out why. First, select Edit Info and verify that your beginning balance, and ending date are all correct. If they are, go back and check any transactions that you manually entered into QuickBooks, so any item that didn't already have a check mark next to it when you started, and see if you can find the error. You can select any item for more details, and if you need to make a change, you can enter it and save. If you cannot find the error, you can still choose to finish and accept the difference. QuickBooks will create a journal entry that adjusts your books by the amount of the difference. However, you should talk to your accountant before doing this. Usually, it's best to resolve any differences in the reconciliation and to not perform this task. Once you've reached a difference of zero, select Finish Now and then Done. You can look at a detailed history of your reconciliations at any time by clicking History by Account. Now you can try reconciling your accounts in QuickBooks. If you still have questions, try our free webinar on reconciling.
With reconciliation complete, let's move on to financial reporting. Financial reports in QuickBooks are crucial for understanding your business financial health, tracking income and expenses, and making data-driven decisions for growth and stability. And a key takeaway, it can be that QuickBooks reports help you stay in control of your finance and meet business goals. The profit and loss report shows your income, expenses, and net profit over a specific time. It's crucial for assessing your business profitability. This report allows you to identify where your revenue comes from and analyze expense trends. For example, if specific expense categories like labor or materials are high, this report helps assess their impact on profits. And by focusing on this report, you can evaluate your overall financial health and ensure your spending aligns with your goals. Once you understand profitability, the next step is to examine your financial position with a balance sheet. The balance sheet offers a real-time snapshot of your business financial standing, and it summarizes your assets, liabilities, and equity to give you a clear picture of your financial health. This report helps you assess whether your business has enough assets to cover short-term obligations. By monitoring changes in equity and liabilities, you can strategize for growth or debt. And it's also essential when dealing with external stakeholders like investors or lenders who evaluate your business liquidity and stability. And after understanding your financial position with this balance sheet, the next step is to dive into the actual movement of cash with the statement of cash flows. The statement of cash flows tracks the flow of cash in and out of your business over a defined period. It's essential for understanding liquidity. This report helps identify cash shortages or surplus, showing whether your business generates enough cash to sustain operations. And for example, it breaks down cash generated from operating activities such as customer payments and investing activities like equipment purchases. And plan for upcoming expenses or investments. Knowing where your cash stands is essential. And now let's understand how to generate these reports step by step in QuickBooks. Generating reports in QuickBooks can seem overwhelming, but breaking it down into steps will make it easier. And you will first start navigating to the Reports tab. This is your gateway to all report types. Use the search bar or browse categories to find what you need. And QuickBooks lets you customize filters, dates, or even group data for tailored insights. And finally, once your report is ready, export or save it sharing. Always keep your reports accessible for decision making. With this step, generating reports is now manageable for you, but effective reporting is not just about data, it's about how you present it. So now we'll give you some tips for effective reporting. And you will first have to focus on key metrics. You will have to use visuals to present data clearly with charts, graphs to make complex information more easy and simple to make it more digestible. You will have also to provide context, explain the trends or changes in the data. You will have to keep it simple to avoid unnecessary details, and you will have to customize for different type of audiences. By following these tips, you can make sure your financial reports communicate the right message effectively and efficiently. Now that we have discussed the importance of financial reports and explored their key features, let's move into QuickBooks to see how to generate these reports. In that case, we will generate a profit and loss report, and I will guide you step by step. First, we'll have to access to the Reports tab. Here on the left side on the dashboard, you see Reports, and we will click on Reports. We can use the top bar to find the report we want to work on, but usually the profit and loss report, it's on the Favorites tab. As you can see here, we will click on Profit and Loss. And once we get here, you can customize the data range, as you can see here, or scroll down to match your reporting needs. And for example, I will select this year to date, but as you can see, you can choose many options. In my case, is already selected this year to date, and we just have to click on run the report. If you want to customize your report, you can click here on the top right corner. And as you can see, QuickBooks allows you to further tailor the report, and you can add columns, the different periods, or filter by specific customers or accounts. And to do this, then you will run the report with the changes you want to have. But in that case, I will leave it like that. Notice how the report breaks down your income, your expenses, and net profit, and you can also drill down into specific categories by clicking on the dollar amounts to view the detailed transactions. For example, if I click on the expense in automobile, if I click there, QuickBooks will show me about this transaction and I can get more information. I will go back to summary report here in the top left corner. And then to end this report, you can save it as a Excel or PDF, for example. I will choose this option. I will click on export to PDF. And as you can see, you can print and you can also save it here. Now I will open my profit and loss report. In that case, because it's just 20 days, you can see I just have expenses. But as I said, you can choose many options and you will be able to run reports for different dates as you want. And that's it. As you can see, QuickBooks makes generating and customizing reports straightforward and intuitive, and that will make sure you have a real-time insights to help guide your business decisions. Let's now move back into the slides to wrap up this week presentation. To wrap up this section, we will work on an activity to put what you have learned into practice. The goal of this activity is to familiarize yourself with generating and customizing reports in QuickBooks. Your task will be to create a profit and loss report following all the steps I showed you before. And you have to experiment with the customization options to filter data by categories or time periods. Once done, you will have to save or export your report as a PDF or Excel file. And this activity will help you understand how to use reports to analyze financial performance, and it's a really critical skill for effective business management. And that concludes our week 3 for our QuickBooks course, where we explored bank reconciliation, financial reporting, and practical steps to apply these features in your own QuickBooks environment. We encourage you to practice these skills and bring any questions to our next session. Thank you for your attention, and I look forward to seeing you in week 4.